Hi, I'm Kerry Grinkmeyer. I'm the host of Best of Us in Retirement. I started this channel because I want to help people make retirement the best part of their lives. And what I want to talk about today is 5 tips that I've learned as to how you can maximize your Social Security. So this is probably a video that is most beneficial, except tip 5 applies to those who have Social Security as well. But 1 through 4 is really for those who aren't taking their Social Security as of yet. But that isn't a reason for you to shut off the video, because if you have younger children or you have children who have not yet qualified for Social Security, not yet taking it, these tips are going to be very beneficial and something you need to share with them. Along the line of sharing, I wanted to also tell you that we're going to have a Zoom call. We have a Discord. A Discord is what I like to call our clubhouse, where we meet and we sit around and talk. And we do that through typing and asking questions and getting answers. That's a Discord. On the Discord also, though, we're going to invite you to a Zoom meeting. And if you haven't had a Zoom meeting, we'll instruct you as to how to do it. And it's going to be held on January the 27th at 4 p.m. Central Standard Time, 5 p.m. Eastern Time. And what I want to do is I want to meet there with you, and I want to give you the opportunity to tell me what you want this channel to be and how we can make it better for you so that you can have a better retirement and make this the best half of your life. So let's get it right into Social Security. As you probably know, it was established in 1935, and it was established to supplement any pensions that you might have as a worker in the United States. Well, those pensions have gone away. My experience is the people who have pensions now are school teachers and government employees. Maybe some firemen, maybe some police force, but government employees but normal workers who work for companies, which is the bulk of the people, probably over 50%, don't have pensions. So they're dependent upon what they've been able to save through 401ks and IRAs to make their to supplement on their Social Security. And then a big part of the population only has Social Security. For those people, these 5 points are extremely important. The first element and the first point I want to share with you is the amount you get paid is dependent upon or is an average, figured against the average of what you earned over the 35 years of the highest paid 35 years of your work history. Now, if you don't work 35 years and you only work 20 years, you have 15 zeros in your calculation. So you can see the most important thing you can do is to be working and paying into Social Security for 35 years. Okay? That is essential. Make sure you do that again. Then the next thing is to max out your earnings in those 35 years. So that is to say, if you have in a position that you can take on a part-time job, or you can create some gig that you do in your 35 years to push your income higher, you're going to benefit. Now, on the other side, a lot of people get near retirement. They haven't worked the full 35, and they start scaling back. They don't take overtime. They ask for more vacations. They don't without pay. And so their average or their income goes down in those years. This is going to hurt your Social Security payment. Now, the other element is in maxing it out that there is a point at which once you make over so much, it doesn't count towards your future Social Security. And that is in 2022, $147,000. So what I'm saying is if you make $150,000 in 2022, $3,000 of that doesn't count towards your average 35-year income. Now, that isn't to say don't take that other $3,000, but what it is to say is if you have the ability through whatever gig you might get, whatever part-time job, whatever additional hours and overtime that you might be able to get paid, you want to max that out in your working years so that you get the maximum Social Security that you can. Okay, then point number 3 is delay your benefits. Okay, your full retirement age at this point is 68 years old. So you can get full Social Security retirement, that's 66 years old, not 68, 66 years old. So if you, though, delay your Social Security till 70, your payment will increase by 8%. To give you an example, let's assume that at 66, you qualify for a $2,000 a month Social Security payment. That works out to be $24,000 a year. If you delay it to 70, it grows by 8% each year, or in other words, it grows to $31,680. So your payment is bigger. But the important element of this that I always tell people is you got to live to 70. If you don't take it at 66 and you die at 69, you lose. You didn't get anything. So you got to know your health. You got to know your life expectancy before you make that decision. But delaying your benefits will maximize your Social Security. Now, number 4 is claim your spousal benefit and delay yours. Okay? Why would you do that? Well, let's say you need some of that money and your spouse has a lower average or a lower potential payment at 68 than you do. Go ahead and take his or hers and delay yours. Why are we doing that? Because we're taking the higher payment and we're increasing it at an 8% a year. Yeah, that makes sense to you? You want to maximize that benefit for the higher benefit. So go ahead and take the spousal if you need it. If you don't, go ahead and delay theirs as well and allow it to grow again if you have the full life expectancy. Now, for this to really work, you've got to live till you're about 82 years old. So again, life expectancy is important. How do you determine that? I would say the first thing you do is look at yourself. Are you overweight? Are you smoking? Are you drinking? Take it early. Then look at your parents. When did they pass away? And if you have a history of early death, then you probably don't want to delay your payment. So put some thought into it. That's what I'm telling you. Put some thought into it. Okay. Then the next element, and this is the element that applies to everybody, even if in fact you are taking your Social Security now, is avoid taxation on your Social Security. Well, how do you do that? Well, you manage your income. And that is to say that you keep your income below $32,000. How do you do that? You don't take income that you don't need. You don't take redemptions on your IRA until you have to. You don't take money out. You invest such that you only take the principal out rather than the gains. And that's, again, managing your income. So let me give you some cues on it. If your total income amounts to between 25,000 and 34,000 as a single, or if your income is 32 to 44 for a married couple, 50% of your Social Security will go into your adjusted gross income and be taxed. On the other hand, for a single, if you're making between 34 and 44,000 for a joint, then 85% of your Social Security is going to be taxed. So what then comes into play is look at where that extra income is coming from. If it's coming from a job, not a job, but say a self-employment situation, much as my situation is, I get income from my YouTube channel. I get income from royalties on the books that I write. I get income from affiliate marketing when you go down into the description and buy some of my, some NMN. I get income there, but it goes not to me, it goes to my LLC, the Best of Us. The LLC then is a separate tax entity. That LLC has expenses that come off the royalties and the affiliate marketing and the income I make off of YouTube. What kind of expenses might those be? Well, I do videos when I travel. So part of my travel becomes an expense. Let's assume that I went on a cruise, which I won't be doing anytime soon, but let's assume I did. And Nita and I went on the cruise, and Nita helped me with the videos, and we incurred a $6,000 expense. Part of that $6,000 expense would be a write-off against my income that I create through YouTube. Does that make sense? So not all of that income makes it to my tax return because I have an LLC. Okay? That's a way that I manage my income. Now, the other way that you can manage your income in retirement is that you don't have to take required minimum distributions from your IRAs until you reach 72. This is called a honeymoon period. Quite often, you're taking your Social Security and you don't need money from your IRA until you're 72. But when you're 72, you've got to start taking the required minimum distributions. That will push your income up higher, and now these limits as to when your Social Security becomes taxable come into play. So you need to be aware of that and manage it accordingly so that you avoid taxes on your Social Security as long as you can. Okay, let's go through just the headlines of the 5 tips I'm giving you. Work at least 35 years. Maximize out your earnings throughout your full retirement. Number 3, delay benefits till you're 70. Number 4, claim spousal benefits and delay yours, whichever is the higher. And then number 5, avoid Social Security taxes. Okay, that's my tip. That's what I've learned over the years, and that's how I manage my Social Security. Again, I want to remind you, if this is the kind of information you like, first, give us a thumbs up, a like, and then number 2, subscribe to the channel. I have a goal to get up to 50,000 members of this channel, or subscribers to the channel. And then I want you to go to the Discord. The Discord is our clubhouse. This is where we're going to gather and meet and share our knowledge with each other. That's an important part of retirement. If you go through it alone, you're going to make some mistakes. So learn from other people. Go to the Discord. You'll find a link to it in the description. And then be sure that you reserve your space for our Zoom meeting that we're going to have on January 27th at 4 p.m. Central Standard Time, where I can get to know you better. Nita's going to participate in it as well. We want as many women involved as possible because, for the most part, I find that women are not participating, but they're the ones who are making most of the decisions. Let's be realistic. So make your way to our Zoom call, and let's get to know each other better, and let's make this the best half of our life. Talk to you again soon.